Okay, good afternoon, traders. Again, for those of you who are coming back, this is not the live trading room. You are in the right place. If you are looking for the active investor workshop, and I really thought I had slides for this. I was sitting here just digging and digging and digging, and I thought I had them, and I just couldn't find them. But I'm sorry. So I am going to just work off of an outline. I don't really have slides. And I'm actually trying to figure out if there's a way for me to send this to you guys through, what's a handout? Oh, there is. Okay, so I'm gonna make it up to you. I dragged and dropped. Why isn't it working? Drag, drop. This isn't a supported format. What are you talking about? What is supported? Doc? Well, what is this? ODT. Okay. If you guys, if it's worth your while, I promise. I'm gonna hurry and save this file. To a separate format, so I can send this to you, and you can have this as this will show up. This is new to me. DocX, that should work. I'm going to drag and drop, and an error occurred. What is going on? Oh, it says I can, and now it's not letting me. Oh man, okay. Okay. I can't do Marshall said. I know I'm trying, it won't load it. I'll try again later. We'll go through it. Let me just get started. Welcome out to the Active Investor Workshop trading plan. I wasn't quite sure as I read the description. It almost seemed like I should be talking about leaps, but I was like, how? I thought we did leaps not long ago, first of all. Second of all, if I'm going to do some long-term stuff, I'd like to see the market just give me a little more out of a consolidation. I'd like to see the volatility kick down a little bit more, and then those leaps are much better with a little bit lower volatility if I'm going to be buying them. So I decided we're going to do trading plan development for long-term success in the trading market. So I'm Scott. I've been trading for going on 21 years, teaching for 17 of them. I need to remind you that options can involve substantial risk and may not be suitable for all investors. Please read characteristics and risks of standardized options prior to investing in them. Evaluate any strategy prior to use to understand risk and suitability. You must be aware of the risks, be willing to accept them in order to trade in these markets. Tradesmen and myself are not investment advisors, not registered with the SEC or FINRA. It should not be assumed that future trade picks will be profitable or will equal past performance. The information in this presentation is provided solely for general education information purposes. Any strategies discussed, including examples using actual securities and price data, are strictly for illustrative and educational purposes. In order to simplify the math, commissions, fees, margin, interest, and taxes have not been included in the examples used in this presentation. Those costs will impact the outcome of your results and should be considered. Lastly, I and/or the team of tradesmen may have a financial interest in the securities presented in the trade picks. Keep in mind that Vlad Karpel, tradesman founder, is also an investor and consultant of AOS Inc., which does business as Trading Block and Money Block. FINRA and SIPC member broker-dealer firm. Tradesman and AOS are not affiliated companies, and each firm's material is not endorsed by the other. Okay. So I don't have slides, but I do have an outline. And essentially, we're just going to talk about this trading plan outline. We're going to talk about what kinds of things we should be doing, thinking about. I'm going to be actually adding a couple of things as we're even talking. And then boom. Okay. and we'll go through this. So, hello, Albert. Good to see you. Hi, Dennis. Back again. Hello, Fed. Good to see you. Hello, Thomas. Good to see you, Marshall. Hello, hello. I think I got everybody. Good. All right, let's jump in. Trading plan. You need a trading plan. That's the bottom line. If you don't have one, you need one. If I said, show me your trading plan, and you started tapping the side of your head, like, it's up here, and it looks great. That's not a plan. That's an idea. It's a notion. This trading plan to me is this: when I start working with somebody in a coaching slash mentoring role, this is what guides us. They say, well, do you have an agenda? No, I have a trading plan. That is the agenda, right? How we build and formulate the structure of our day-to-day activities, our weekend activities, how we manage risk, what are our trading rules, how do we analyze the market, how do I analyze a stock, how do I, everything that we do needs to be on purpose, deliberate. That's the word, very deliberate. That's what I believe in, deliberate trading. It's carefully considered, in advance, and well rehearsed. That's my trading. That's what I want. How can I have that? How can I be deliberate? If I'm deliberate, then I have the ability to focus on constant improvement. The Japanese have a word for it. They call it kaizen. Maybe you've heard of it. Kaizen, constant improvement. In order for me to constantly improve as a trader, I need to be very specific. What am I trying to improve? Me, my process, how I do something, my routines, my record keeping, what am I doing better? Don't just trade. There is a book. I'm going to give you a little backstory here. So like I said, get your coffee ready. If you don't want to listen to me talk, check on out of here. If you want to know the secret to trading, stay here because this is it. There's a book called Outliers, and it talks about very successful people and what took for them to be successful, and that a lot of factors have to come together. But one of the principles mentioned in this book, Outliers, is 10,000 hours. You have to put in 10,000 hours to be an expert, a master at something, whatever your craft may or may not be. And it's a journalist, very, very compelling storyteller. I'm a big fan of Malcolm Gladwell. A lot of good books that he's written that I like. But the research was a little off, and the social scientist who did the research said he's on the right track. But it's not practice makes perfect; it's perfect practice makes perfect. And I'm going to give you this little story, and then we're going to dive into this plan. So this man was being interviewed by a PhD student, and she was saying, Lars, he was Swedish. I don't know. That's just the first Swedish name I could think of. Lars, I go running every day. She was talking about getting better. She goes, I go jogging every day, but it's not like I get better at it. And he goes, of course not. Why would you expect to? He said, you probably tie your shoes, put your earphones in, turn your music on, and then it does its job. Its job in that regard is to get your heart pumping and keep you in shape. You're not jogging to get better. You're jogging to exercise. So why would you expect to get better? Well, that's what we want to be careful to avoid in our trading, that we're just trading. But it's trading. You're not jogging. You're not jogging to get better. You're just jogging. Are you trading to get better, or are you just trading? So he started talking about some of the things to improve. What shoe you wear, what kind of arches, how you tie your shoe, how you stretch, setting markers along your route in order to set times for goals, in order to improve your times, working on how you step, your gait, your mechanics, the clothes you wear, right? I mean, he went through 20 things that you could work on to get better. So if you wanted to run better, you could definitely start getting deliberate with every aspect of your running and try to improve it. That's what we're talking about here. If you want to get better at trading, you can't just be like, oh, I hope to become a better trader. How? Be specific. How? You're just hoping your experience will make you better? It won't. If you don't create a structure, an organization to help facilitate that improvement. So this I work off of an analogy that when you trade, you're starting a business. That's how I believe it should be. I started with a new coaching person recently, and he talked about he has competitive horse. He doesn't race. He used to race. Now he does little show events. And I said, "Oh, your horse. does that pay you or do you pay it?" And he goes, "Oh yeah, I definitely pay it," which makes it a hobby, right? I golf. I pay golf, right? That's one of my hobbies. Hobbies are something that we pay. Businesses are something we get paid from. We have to treat this like a business, see it as a business, work it like a business, have habits and commitment and discipline like it's a business, motivation like it's a business. This is your business. So this is your business plan. And like any good business plan, let me change the layout. I don't like it on 2 pages, but I'm not 100% sure. Focus. No? How could I make it one page at a time? I don't want 2 pages. Oops. Can everybody see this okay? Since I don't have slides, let me know. I'll continue to try to magnify it. Yes? 150? Thank you, Anderson. All right. Trading plan development outline. No screen. Can you guys see my screen? You should be able to see a trading plan development outline. I have one person saying no. Everybody else saying yes. So to that person, I'm not sure. Look around, click on your go-to meeting. You should see it, but it is being shared. There's nothing I can do on my end. Oh, hey Henry, good to see you. So, what does every good business plan start with? Who's driving the ship? Start with you. Right? My strengths, my weaknesses, strengths and weaknesses. I would even actually add another section here as I think about this. Commitment and discipline. Talk about it. How are you going to achieve it? Describe your commitment, put it in there. A mission statement. This is a really interesting exercise. When I first put this trading plan development outline together, it was at least 15 years ago that I really worked to build this plan in order to facilitate creating my own trading plan. This is I feel so old sometimes when I start saying these things, but yes, this is what I used to create my plan, and it was quite a long time ago now. And it's been one of the best things I've ever done in my trading is to sit down and do it. Right? One of the hardest things about writing a trading plan is just getting started. You're eating an elephant. How do you do it? Take a bite, one bite at a time. This should help break it down. What are the things that I tell the traders that I work with? The best trading plans are ugly trading plans. I've had traders I've worked with come up and show me these beautiful polished printed documents, and they're spiral bound, and there's a logo on the front, and magnificent. And I say, the problem is it's changed already, and it's very hard for you to change it. You'll be reluctant to change it now, and I don't want you to be reluctant to change your plan. So an outline is very easy. It's very easy to change. So all I have to do is boom, tab, and I start typing my strengths or my weaknesses. So it's very easy for me to work on a structure when it's built in this type of a format. So first things first, strengths and weaknesses. What are your strengths as a trader? What are your weaknesses? Your weaknesses, we really need to be honest and focus on, because as we start setting goals, well, one of the things I want to set goals on is how do I first mitigate my weaknesses and then maybe even turn them to strengths. Mission statement. Like I said, one of the first things I did, I actually Googled how to write a mission statement like I was starting a business. And it was very interesting. It talked about core objectives, and your beliefs. And I thought that makes perfect sense for trading. What are my core objectives? To create rule-based systems that allow me to achieve constant improvement, be very deliberate with everything I trade, to focus on being able to trade in any market condition and be especially sensitive to market transitions. That's the kind of thing I'm looking for, right? Where I really talk about what am I building here? Vision statement's a little more colorful. This is the premise for something like that. I believe that trading, when it's done well and right, will change your life, or it can. Okay, how? 5 years from now, if you're trading the way you want to be, what does your life look like, right? And you start thinking about things like retiring earlier, traveling, charitable giving, helping grandkids go to college, kids go to college, whatever it is, right? What is the success you achieve as a trader going to provide your life? It's not enough to be like, I'll make money, because you're going to hit a time when you're not making money. And if money's your motivation and you're not making money, well, then I guess you just lost your motivation, and that's hard. I need something strong, colorful, that helps me to, remember what it is that I'm doing here. It's very interesting as I think about it, because I remember giving some presentations quite a number of years ago, and the slide I had would be a picture of my children, and it was my 3-year-old son pulling my 18-month-old or 12-month-old daughter in a wagon, and he's a freshman in college now, and she's just got her driver's license. So I believe I've achieved what I wanted, because here I am still trading. Make your motivation strong. Don't gloss over some of these things that psychologically we need, because I can tell you right now, if it hasn't already, trading can take you dark places psychologically. You second guess, you lose confidence. I found that sometimes trickled to other parts of my life when I was early in my trading. It was difficult sometimes. It's okay to talk about that and be like, yeah. Is this being recorded? Oh, hell yes. And you can get a copy of it when we're done. And I hope you find it worthwhile going through it again. Because to me, this is some of the most important stuff I do when people hire me to coach. Next thing, we've covered ourselves. What's the next thing we want to focus on? Everybody else, right? Sun Tzu, who wrote the book The Art of War, said if you want to win every battle, if you know your enemy but not yourself, you'll win half your battles. If you know yourself but not the enemy, you'll win half your battles. You need to know yourself and know the enemy. Who's the enemy? Everybody else. This is like a great big poker game. If I want to sit down at a poker table and make money for my stacks to get bigger, somebody else's stacks have to get smaller. That's how it works. I need to know what everybody else is doing. So I put a particular emphasis on market posture, market forecasting. Every day in our trading rooms, we talk about market conditions. We talk about trends. We talk about support and resistance. What does the model see? What does the VIX tell us? This will actually give you a little insight into my full process, right? The full process. I would actually, as I'm doing this, I'm going to just kind of make some notes to myself. Routines. So let's talk about it. So what are the routines? There's one. Whoops. There's one. There's one. There's one. There's one. There's one. Those are the 6 things I look at. I analyze long-term trends, short-term trends. I analyze volume. I analyze major market comparison. Would I add relative strength to market forecast? Market comparison is actually a relative strength comparison of the Dow, the NASDAQ, the Russell, the S&P over a 9-month, 6-month, 3-month period. I would love to actually, I'm going to ask Vod, I would actually love to show my routine one time that I do on the weekends, where I just go through this whole process. It's a very cool routine. I've done it again for probably 14 years in the same format that I, with very small changes. But I do look at major market comparison. I do the same thing for sector rotation. You'll always hear me in the trading room talking about what sectors do I like? I want to find strength. When I find strong sectors, then I go find strong stocks, right? Makes sense. Volatility is the VIX. Type that in there if you're taking notes, and I will do my very best to find a way to send this to you again before we're done. As it stands, I'm going to be saving changes as we go. What does this all lead to? It leads to my market posture. Are you bullish? Are you bearish? Are you neutral? Over what period of time? I also think about my trading posture. My trading posture is, what am I doing today? I'm bullish overall, but we only put one new bullish trade on today because a lot of things are pushing against resistance right now. I don't want to slap a bunch of new bullish trades on just because I'm bullish and trade into a resistance level, right? I want to make sure that I try to still time my entries and catch coming out of consolidations. So my market posture is, what am I overall? I do that once a week unless something pretty major happens during the week, and then I'll reassess it. So that's a Sunday night routine. Trading posture is something I think about all the time. What am I going to do today? What am I going to do today? So the implications of these routines should be, what types of trades are we thinking about? It's not enough to say you're bullish. What do you mean? Am I going to build bull put spreads, buy calls, buy stock? Broken wing butterflies? Am I going to do a ratio spread? What kind of trades make sense? How long should they last? What kind of risk should I be taking, right? Am I taking more risk because the markets are good? Less risk because the markets are choppy? What systems or strategies make sense in these conditions? So I'm touching on what the synopsis said we would touch on today, and that is long-term strategies. Here's your long-term strategies. Adjust your strategies to market conditions. Be water, my friends, as Bruce Lee would say. Be water. If you put water in a cup, it becomes the cup. Put it in a teapot, it becomes the teapot. Don't be rigid, be flexible and adaptive. Find what the market is and then fit until it transitions, and then be ready for that. That's the best thing we can do. Trade management strategies. This would include tactics. How am I going to possibly tighten stops, sell at certain targets, etc., etc., etc. And this is a big new one for me, you guys, is hedging. I've always hedged, not always, but at least, again, for a long, long time. But it's always been just like kind of a basic thing here and there. But I focus on my directional trading more, and I realized, as we've been doing some hedging, and I made money both on my hedging and on my bullish trades, and I thought, wow, I just put some insurance on and got paid for it, and then still made money on what I was insuring. How can I do that more frequently? Well, that's what I'm trying to think about. I've got some ideas, but I want my own personal hedging. This is the component of my trading plan that I'm working on right now as we speak, and that is, how can I do better getting things in place that might help me in the short term, where I can sustain trades, wait for them to come back and make money eventually, and make a little money while I'm sustaining them. Very good things. Okay, so there it is. Those are the first two sections. Us, the market. Before we talked about a single chart, a single indicator, a trade, what do we start with? With us, right? Get your psychology right, your mindset right, get balanced. If you feel like you're riding a roller coaster, you're doing something wrong. Make sure you understand the market. There's a quote I came across early in my trading that I loved. It says, the blade of grass who doesn't bow before the lawnmower gets his head cut off, or her head cut off. You and me are blades of grass, my friends. The market's the lawnmower. So know as much about the lawnmower as you can, so you know when it's time to stand up and get some sun, and know when it's time to duck. There you go. Any questions? Let me know. I'm just going to kind of move on. I'll circle back if I need to. The next section, in my analysis, do I do pairs trading, bull bear? Well, it's not really pairs trading. It's really just, different types of hedges. Mostly, if I can catch it when the volatility is low, I just buy puts in the short term on the SPY. Try to, if I catch the market, take some money off the table and things like that. I'm also exploring some VIX-based strategies. So anything that does bring balance. But I'm not always looking for balance. Right now, we've been in a bull market. Bull, bull, bull. Nothing but bull. And yet people keep telling me about these puts they're looking for. And I say, why? I'm not looking for puts. I'm looking for bulls. But I want to protect my portfolio if all of a sudden things chop a little bit. There's nothing bearish about this market to me. Trading systems. So now we're talking about specifically, what are you going to do with your trading? These are your trading rules, actually. But I say systems because each system I have is a product. So I might have a bounce system for stocks that are bouncing off of support. I might have a breakout system for stocks that are breaking resistance. Different rules, different products. So, markets, what do I buy or sell? How am I going to find the stock for that system? If you subscribe to a service, you would want to give that service its entire, right? So if you're following any of our trades to the T, all you're doing is mapping out what you're supposed to do. So what? Do you find it or does it get given to you? Time frames. If you're doing the active trader, your time frame is hours. If you're doing the monthly trader, your time frame is days. So it depends, right? Position sizing. You need to have a mechanism that helps you to determine how much we buy or sell, right? How do we determine the position size when we buy stock? How much stock do we buy? If we're trading options, how much options do you buy? Remember that that's one of our core, and we'll talk about this in just a minute, one of our core tools that we use for risk management. Entries. What is your exact setup and trigger point that says, now, take it, get it? When you get your entry, how do you decide your stop? What's the worst case scenario on the losing side? What's your exit? When are you going to get out on the winning side? What's your trade management? How are you going to reduce risk by moving stops or protect your profits? Tactics. How are you going to sell and other things along those lines? So that is the actual, when I say trading plan, this is what a lot of people think about. They think about trading rules. And they think about their rules for getting in and staying in, but this is just a development of a trading system. You might have 2 or 3 systems that you use, and you would want to have a specifically designed set of rules for each system, and you would want to keep records independent. If I have a candy store and I sell candy bars, chocolate bars, and jawbreakers, and bubble gum, and black licorice. Well, I want to know, because I have a feeling that the black licorice isn't going to make any money, right? Does anyone really still like black licorice? Did they ever like black licorice? I don't even know. But I want to know, what are the profit margins for each of those products? I want to know, what are the profit margins for each of the systems that I trade? Because I definitely want to know if I'm trading a system that's not making any money, right? So that I can stop doing that. So that's what we're trying to do with any given system that you look to develop. These are the types of parameters that you need to have specific sets of rules for. So what would I do here? I would hit enter and I would start to describe. I'm going to find my stocks for this system by blah, blah, right? We're just typing. Once you get started on a trading plan, it's easier to refine than it is to start. You just start typing and then figure it out. Okay, let me know if you have any questions about trading systems. And essentially, you might have, like I said, 3 full versions of this where you just repeat it, right? And you basically would say, let's see if I can do it. System name, and then 1, 2, 3, 6, 7, 8. Whoops, too many. There we go. So now what you would be able to do is you'd be able to say, okay, I have this system, and then the next system, and then the next system, organized, right? One of the goals in sitting down and writing this is to find holes in your trading. One of my jobs when I work with people as a coach is to find holes in their trading. And I'm good at it, but the market's better. The market will always find the holes in your trading plan, and obviously holes is where your money falls out. So that's what we're trying to do. Find them, address them, right? Keep them from negatively impacting you. Man, I've got a blizzard at my house. It really started coming down out there. That's crazy. Anybody else getting snowed on right now? Let me know. Risk management. It's so important. It gets its own category. We know that risk management falls here as well, right? On an individual trade basis. But risk management. So what are we talking about? Number one, portfolio heat. How much risk are you willing to take total at any given time? That's important. So that would be something I would control according to market conditions. No snow in Orlando, Dennis says. Yeah, I wouldn't think so. I mean, pretty crazy that Texas got it, right? I mean, that's crazy. I remember I grew up in Dallas. We used to get ice storms, but not a lot of snow. So portfolio heat is going to help me decide how much risk do I take overall. The overall risk will be determined by market conditions. So if we find ourselves in a strongly uptrending market with low volatility, those are your best conditions. I'm going to put my risk to the maximum level, make as much money as I can. And I'm going to dial my risk back when I have anything less than optimal conditions. So if it transitions, if it gets sideways and choppy, I get it, man. People will always be like, oh, you're traders. We can make money in any market. Look at us brag and boast and swell our chests with pride. It's not the same. Anyone who tells you different, it's just not the same. There's times when we want to push harder to make as much money as we can. And there's times that we want to relax and protect ourselves, keep the money we had, avoid drawdown, live to trade another day. There's nothing, I mean, it's conditions matter, right? It doesn't matter what you do. If you fish, nobody's going to think you're a great fisherman if you're like, oh, it's a hurricane, I can fish in any conditions. I'm a great fisher. Are you? If you see a farmer out plowing the fresh snow in the fields of Iowa right now, are you thinking that's a hell of a farmer, he can farm in any conditions? Or are you thinking that guy needs some mental help? Okay, it's fine to recognize that there's seasonality in the market. We talk about that. There are times where trading will be better, easier, and you'll make more money. So that's when we push. And there'll be times when it's harder and choppier and you'll struggle. So trade less, trade smaller, be more restrictive on the types of trades. So you can see here, as I decide my portfolio heat and my trade risk, that helps me decide how many trades should I be in at any given time? How will I make risk adjustments, both in current trades and as an overall portfolio level? How do I correlate my risk to my current market posture? And that's what we just talked about. Tsunami indicators. So this is something that I've talked about for years. And what this would lead to is hedging again, right? So when we see potential for tsunamis, we want to hedge against it. But now I'm thinking, do I need a tsunami or do I just want to hedge against getting wet? It doesn't have to be catastrophic. I definitely want to protect against catastrophic, but I want to make sure that I'm preparing other ways as well. Lastly, with risk management, and this is one that a lot of people don't talk about, and that is when to break, when to say, you know what, I've got to reset. There are 3 considerations for me that would cause a break. So let me even type these out. Number 1 would be drawdown. If you draw down a certain percent in your account and you say that's too much, I'm going to take a break, figure things out. Number 2, number of concurrent losing trades. If I lose 7 in a row, 9 in a row, right? If I hear someone say that they lose 3 in a row, I'll be like, you should never trade again. If you can't take 3 losing trades in a row without having to take a break from trading, I don't know what to tell you. But there needs to be a time where you think, and then the last one is you're out of your zone. I'm going to call it my flow. Out of my trading flow. The flow where you know you're energized, you're not cocky, but you're aware, you're confident, you're seeing things, you're adapting, you're managing well, you have a plan for every trade, you're executing your plan with discipline, right? You know when you're trading your best, and then you know when you're like getting pissed, you're getting frustrated, impatient, second guessing. You just kind of feel yourself in poker. They call it on tilt. I actually call it the same thing here. I don't want to trade on tilt. I want to right the ship. It's hard to right the ship with a bunch of risk on. So what do? I'll say, all right, I'm going to take a week off. The funny thing is, the last 3 times I did it, I didn't last the week. And I said, that's okay. I feel like I took a few days. I'm ready to get back into things. Just be aware that might come and might be what exactly you need to do at any given time. So, okay, that's 2 more sections down. We've got just a few more to go. Where am I? Routines. Any questions? Let me know. Do I paper trade at those times? Yeah. What's funny is I actually will do little paper trade experiments constantly. So I always paper trade. I might live trade one thing and paper trade a different variation just to kind of be like, okay, let's see how this goes because I'm testing something. So I do a lot of paper trading anyways, but yes, I absolutely do that. It's not actually rebuilding confidence. It's tamping down frustrations for me. For a new trader, yeah, I could see that, and they might need to spend some time rebuilding confidence. For me, it's a matter of I'm on tilt, I'm pissed off, I want to punch my monitor, I need to take a breath, relax, and just start trading better again. So, that's my thought. Okay, section 5 of our beautiful trading plan is routines. We are what we repeatedly do. Excellence, therefore, is a habit. Okay, so let's build our habits, right? Let's know exactly what we do. And if I go and get in a plane, I want to know that the pilot is following every step of the plan, right? That he's not sitting down or she's not sitting down into the cockpit saying, all right, let's try it this way today, right? You're not hoping for that. You want to know step 1, hit this button. Step 2, flip this switch. Step 3, check this dial. And that it's guided by a computer who's making sure they do every step, and then we're ready to go. Same thing if I'm going for surgery. I want to know that there's a process and that it's the right one. These things take my life in their hands. Well, we're close, man. Let's build routines that make sense, that makes it so we know we're doing first things first, as Stephen Covey would say. How do I break my routines down? I have my daily routines. So what do I do in the morning before the market opens and I'm enjoying my first cup of coffee? What do I do during market hours to manage my trades, evaluate new opportunities, place new trades, right? You'll notice that the during market time is oriented towards trading. For me, some people don't have the ability and they have to make adjustments, and they only get it before and after, but they don't get it during. Okay, well, they have to figure that out and make those adjustments. Number 3, what do I do after market close to process the market, make sure my stops are in a good place, anything I need to be aware of, etc. One of my weekly routines on the weekend, I do my market posture, my most important process. I go through my whole posture, and when I'm done, I should have 2 or 3 sectors. So I'm going to do my searching on the weekend. I'm going to go search those sectors for the strongest, most liquid stocks that are available in each of those sectors. I'm going to put it in my watch list. So I'm going to do watch list maintenance. I'm going to get rid of old stocks that don't look good. I'm going to hopefully replace it with new stocks. And I want to move forward confidently, knowing that I will always have fresh opportunities coming into my watch list. I do record keeping on the weekend. Don't let it go to monthly, or you won't be a record keeper. Get it done by the end of the week. Update your logs. I review my trades. I review the economic calendar. Just make sure I know what's going on so that when Monday starts and the bell rings, I'm ready to go. Monthly or quarterly, this is where you're going to be looking at goals that you set. This is going to be looking at tax considerations, looking at record keeping and doing some analytics, working on your trading plan. These are your less regular routines that you do once a month, once a quarter, etc. But if you don't write your monthly and quarterly goals down, you won't do those things, right? Period. So there you go. Number 6, record keeping. So now we're talking about right, the business is making our business plan. Well, what else does every good business need? It needs good record keeping. What does that mean? So there's 3 things that I look at. This is the main one, the trade log. We're going to talk about the trade log when we talk about analytics. I mean, I don't need to keep track. I can go to my broker and they keep track. I need to keep track so I can learn from my trading, learn from the experience I'm trying to get as I am trading. So we'll talk about that here with the analytics. That's what a trade log is for, to have the numbers. Trading is a numbers game. That's where your numbers are. Trade journal. To be honest with you, the trade journal is just the notes column of the trade log now for me. If something occurs on a trade where I think that was weird, or I did something wrong, did I make a mistake, I'll put it in the notes. Did I lose discipline? Did I do something? Did the market do something weird? You know, if the way I would have people think about it is, imagine if you look back in 3 months, was there something that occurred on a trade that you would want to know 3 months from now when you look backwards to help you be like, yeah, okay, let's process that. What we're trying to do is make it so that when we have a really good or a really bad period, a month, 2 months, whatever it might be, we want to be able to go back and say, hey, what did we do right? What can we repeat? Did I just read the market right? Great. Well, that should help you understand to do more with it. Or what did I do wrong? If you have a bad quarter, you want to be able to go back to that quarter and say, all right, I need to learn from this so this never happens again. And that's what we're trying to do, is we're trying to keep records in a way that allows us to learn better from our own trading, right? It's important for me to be able to learn from myself as a trader. Observation log is a similar thing. I just keep track of something like this on I just basically make an observation, put a date on it, and explain what I saw. And what I'm trying to do is, if I say, oh man, I've noticed something weird about the VIX, I'll write it down. Wow, this is so weird. I've never seen this, right? Something about the conditions. Because again, if 3 months from now, the period of time we're in is a period that we're going to evaluate to try to learn from, it would be nice to have a little information about what you thought about the market. Well, the way that I actually keep a spreadsheet when I do my market posture, which allows me to be able to go back in time to see how I assessed the market. Was I pretty on point? Was I seeing the changes as they came? It's very, very useful. So the more records we keep, the easier it is to learn from ourselves. If you don't have good records, you're just sort of blindly hoping, you're basically throwing spaghetti at the wall and hoping something sticks. Okay, we're down to our last 2. I just want to stop one more time to see if any questions have come up about any of these sections. So you can see we've done a lot of organizing and structuring of routines, of rules, of processes, etc. We should have been trading and managing trades and then keeping records of those trades. And now we have a log what do we do with that log? We run some analytics. I like to run analytics cumulatively, so I just look at a broad period of time. I go by time frame, so I might look at August versus September, September versus October, last week versus this week. I can do time frame. By number of trades, I like to keep track of my trades every 25. I was told, oh, I should have asked. I started with a new guy who is a stats professor in college, retired. But I actually worked with a mathematician and a statistician. They both told me the same thing, that 33 is the sample size necessary for statistical relevance. I'm a little impatient. I go with 25. So every 25 trades, I stop and I look at my trades, and you can see the types of analytics I do in just a minute. I'll show you. We also want to keep analytics by system or strategy. Every system deserves its own set of analytics so that you can see, what is this system worth to me? What do we keep track of? How many trades I've made? How many of those trades were right? How many of those trades were wrong? What is my winning percentage? What is my losing percentage? When I'm right, on average, how much do I make? When I'm wrong, on average, how much do I lose? What is my reward to risk ratio? And all of that spits out expectancy. That is my bottom line as a trader. How much do I expect to make for every dollar I put at risk? That number needs to be positive. If it's not a positive number, there's nothing there for us, right? People say, what's the difference between a gambler and a trader? And the answer is a positive expectancy. Go to good to see you, Albert. See you later. You go to a casino, every game is a negative expectancy. You're a gambler. You hope to win, but over time you'll lose. Here, a positive expectancy is what we need to say. Over time, we expect to win. That is expectancy. And then the last one I put an asterisk by. This is a tough one. This is a risk management formula. It's a risk optimization formula called Kelly criterion. It's very cool math that I use to help try to optimize my risk. Those are the analytics I keep track of over these types of, right? By time frame, by number of trades, by system, by strategy, overall. I want to slice and dice my numbers a number of different ways in order to make sure that I have what I need. Okay. Yeah, I mean, yeah, a spreadsheet is what I use for that typically, and that's a helpful thing. The last piece of our plan. We've gone through all of this. We've worked on ourselves, our ability to read the market, to find stocks, build a watch list, put them on a list, to trade them according to a set of rules, to manage our risk, to structure our days and our routines, to keep records and analyze our record keeping in order to make sure that we understand exactly what's going on in our trading. And after all of that, all that we know about ourselves and our process, what are we trying to do? Kaizen, constant improvement. Now, there's two types of goals that we set. Outcome goals, and you should have only one, if any, which we base on trading results. That's where we say, my goal is to make 50,000, 100,000, 3%, 8% per month, per week, per day, per year. I don't know, right? Yeah, okay. We definitely want to be profitable, but the outcome, right? We should focus our attention on trading well and let the results take care of themselves. I'm not trying to force results. I'm trying to become better at my craft, better at trading. And the better I trade, the more money I'll make, or the less money I'll lose if that happens to be the market we're in. But that's what I'm interested in. So I'm not really looking for outcome goals. I'm looking for process goals. Process goals are focused on improving the process. How do I take losses better? How do I let my winners run better? How do I improve my entry? How do I improve my searching? How do I improve my structure, my balance, my routine? Whatever it might be, right? That's important for us to focus on specific aspects of our process that we have identified as weaknesses that we need to improve. Goal record keeping. I do think they should be written, whether you use a Word document, handwrite it in a notebook, a spreadsheet. We want to write down, what date did I set the goal? What was the goal? Here's the setting. Here's the process that we're trying to use. Number one, we want the goal to be specific, measurable, and achievable. So you're not like, oh, I want my goal is to be a better trader. My goal is to take losses better. What does that mean? What is your loss now, first of all, right? Your average loss now, and what do you want your average loss to be? That's a specific and quantifiable objective. So that's the first thing is set goals that we can achieve, that we can measure, and that are very specific. Number two, set the timeline. How long is this goal going to take? A week, a month? Be careful. Maybe set a few short-term, a few long-term. What are the specific action steps necessary to try to achieve this goal? What are you going to do? What 4 things are you going to do? Specific action that you'll take in order to try to achieve the objective that you set. The next thing we'll do is monitor our goals. So if I set a goal for a month, I'm going to check it every week. How am I doing? I'm not going to wait till the end of the month to be like, oh, hell, I forgot about that goal. I want to set the goal, and then at the end of the first week, be like, yeah, you know what? I didn't get what I needed to do. I'm going to push hard to get on again. And then the next week comes, oh, I still didn't. I'm going to push hard again. And the third week, you're like, all right, I did it. Well, I'm now behind, so I might have to adapt my goal, possibly. But we want to talk about, the ability to achieve goals and if not, set them again. Our goals should be focused on weaknesses and trading priorities, and the only way you'll be able to identify trading priorities is through a good risk management structure. So make sure you're managing your risk, a good record keeping structure. Make sure you're keeping records that you'll be able to see, what's going on. So weaknesses in trading priorities. Now, as we really focus on improving, there are 3 things. 3 things that we can do to be better traders. Number 1, be right more often. So in that regard, we're talking about entry signals, or possibly how we hold and manage trades. But entry signals, how do we improve on that, right? Goal number 2, make more money when you're right. How do you let your winners run better? That's us focusing on how we manage trades, how we stick with trades, the things we do in order to execute as best we can when we're winning. And then number 3, lose less money when you're wrong. You'll notice it's highlighted because in order of our ability to impact these variables, it's the reverse. We can't just decide to be right more often, like, oh, now I'm right more, without especially making a substantial change to the potential reward to risk ratio. We can do better, making more money when we're right, letting our winners run, staying with it, working on strategies that help us to stay with winning trades. A lot of people I'm working with are constantly kind of working on that because they just have more trades than they want, that they get spooked and sell it. And you got to think, that's fear. I don't want fear when I'm making money. I want hope. Hope when I'm making money, fear when I'm losing. So lose less money when you're wrong is definitely the top priority. That's the one that we can work on best. How can you be better at being wrong? Then work on your winners. Am I staying with trades as long as I could? Then work on your routines for entries and just say, hey, can I improve what I'm doing there? And that takes us to the end of the trading plan. So this, I'm going to try to send it again to you guys right now as we speak. Whoops. View handouts. Let me know if you have any questions about any of the presentations. Huh. Okay. Yeah, we'll have to figure it out. But this was recorded, so you can also go take a peek and see. This is important stuff. I don't believe you will achieve long-term success if you don't have a plan like this in place. So I would highly recommend you, go from there. When I'm done, I can open it. Yeah, I can try to maximize this, dial back down. Maybe I could go one more. So there's, I'm going to leave this up for just like a minute or two. And this will be here in the recording, so you can kind of stop and just, I mean, it's not a ton of typing. It's just the having the structure in the first place. Made me feel like starting from zero. Oh, well, actually, what I would say is you'll find that if you've done your work, you'll be able to get through this thing pretty fast. And I think you'll like the structure that you create. The emotion I want when I'm trading is to feel control. You're not seeing my screen right now. Let me see what's going on. Oh, there we go. Sorry. Is it on now? Okay. So I'm going to leave this up for just a minute. And then I'm going to go to the next 2 pages and that'll give you guys everything. So you won't be able to write it all now, but it'll be there in the recording as well. Here is the other piece of this right here. Comment came in, understand discipline rules make a discipline rules based approach to trading. Thanks for the reinforcement. You're welcome, Henry, as always. There's the other part. So what do I say? Get to work on that trading plan. Ask questions about it in the trading room if you come, right? Would love to have us all kind of on the same page as far as that goes. So that's what we'll work on. Anyways, I gotta run. It's really good to see everybody. I won't see you for another fortnight if you're only coming out for these active investors. But if that's it, then I'll look forward to seeing you in a fortnight. If you're in the trading rooms, I will see you tomorrow afternoon. Thank you, everybody, for coming out and hanging out with me today. I appreciate your time and attention. I hope you enjoy the rest of your day. And as always, happy trading.